We're going to do the Chapter 4 quiz now so that you have an idea of how to get this done. So we are making a journal entry for depreciation on equipment. So depreciation expense, it says record debits first. So depreciation expense, you always debit an expense. And I'm going to go ahead and credit the accumulated depreciation. Accrued wage expense. So I'm going to do wages payable, or excuse me, wage expense first because we're going to do the debit of 1,000, and then wages payable of 1,000. Oops. And then supplies on hand are 400. So let's see what we had before that. So we had office supplies of 800. I'm going to need to lower that by 400. So office supply expense or supply expense, I'm going to increase by 400, and I'm going to lower my office supplies by 400 with a credit. Prepaid insurance expired of $500. So I'm going to say insurance expense because it's an expense. I can no longer turn it into cash or use it. And then I'm going to lower my prepaid insurance by 500. Unearned revenue earned during December is 4,600. So I'm going to lower my unearned revenue, 4,600. I'm going to increase my revenue, my service revenue, by 4,600 because we're changing it from unearned revenue, which is a liability, to revenue. And accrued service revenue. So I'm going to have an accounts receivable. This is revenue that I have earned but have not yet been paid for. There we go. And then here. So for closing accounts, we are going to close everything that is a revenue, an expense, and a dividend. Anything that is an asset or a liability, we will not be closing. So office supplies, we do not close. Interest expense is an expense, yes. Retained earnings, no. That number just changes. Dividends, yes. Revenue, yes. Accumulated depreciation is on the balance sheet, so no. Rent expense, yes. Unearned revenue is a liability, no. Accounts payable, liability, so no. We do not close those accounts. The classified balance sheet, I want to talk about it and then we'll kind of do it. But the classified balance sheet splits your assets and your liabilities into different categories. So it's just more specific than a standard balance sheet. So when we have here, let's talk about what our short-term assets are. So cash, office supplies, and prepaid rent are our short-term assets or our current assets, same thing. So let's do our current assets, and then we have cash, and we have accounts receivable. I thought we had accounts receivable. Maybe we don't. Okay. So office supplies and prepaid rent are our current assets. So then we're going to have our total of current assets. Our next is going to be our accumulated depreciation. And excuse me, let's put our equipment first with the accumulated depreciation. And what else do we have? This is going to give us our current asset, our current plant asset. So it's going to be our equipment minus our accumulated depreciation is going to give us our net plant asset there. So then that's going to total our all of our assets. So total assets. So let's take a look at our liabilities. Let's do current. Current liabilities, those that we're going to use within 1 year. So accounts payable. Let's see, do we have any other payables? Salaries payable for sure. Any other payables that we want to pay within 1 year? It looks like maybe not. we do have unearned revenue, and that is a current liability. So that's going to give us our total current liabilities. And then we have our long-term liabilities, which is going to be a note payable long-term. I think that's it. So we have total liabilities here. So let's take a look at our equity. So our first equity number is going to be our retained earnings and dividends. So then we have total stockholders' equity, and then we have total liabilities and stockholders' equity. This number should match your total assets. Let's take a look at this. So we have our unadjusted trial balance, and we have our adjustments. So here are our adjustments. Now, the thing to do here is to go ahead and make your adjustments and then put them into these categories, and then you have your adjusted trial balance. Here's what I want you to do for the income statement. Well, I'll go ahead and do some of the adjustments here. So unearned revenue during the year of $150. So we have to lower our unearned revenue, and we do that with a debit. So this category right here. So unearned revenue, we're going to lower with 150, and then we're going to increase our revenue by 150. So that's, I guess I should put A. Is it A or 1? A. So I'm going to do A and A. Okay. So then for B, we have office supplies on hand of 5,000. So how many office supplies did we start with, or how much in office supplies? 7,500. So I'm going to have to lower my office supplies by 2,500, and that also goes to supply expense, which is a debit. You always debit an expense. Okay. C, depreciation for the year, 7,500. So my depreciation expense, how much was it? 7,500. 7,500. And my accumulated depreciation is going up on the credit side by 7,500. D, accrued salary expense of 5,500. So my salary expense went up. This is D by 5,500. My salaries payable also went up by 5,500. And finally, accrued service revenue of 8,000. So that means we have not been paid for it yet. So I'm going to say that that's an accounts receivable. 5,000, 8,000. And revenue. Oops. So I'm going to change this to 8150. Okay. Or I guess I can do this 150. Sorry. And then E is 8,000. Okay. So the next part is to do my adjusted trial balance. And I'm just adding them across the board. Cash, you will never have an adjusting journal entry for cash. So that's going to stay the same. I started on the debit side at 51,000 for accounts receivable. I added an additional 8,000, so I'm at 59. Office supplies, I started on the debit side at 75, and then I subtracted at 25, so I'm now at 5,000. Equipment stayed the same. You will not have an adjusting journal entry there. For accumulated depreciation, I started at 15, and then I added an additional 7,500, so I'm at 22,500. Accounts payable didn't change. Salaries payable increased. Unearned revenue, I started on the credit side at 4,500, and then I subtracted 150, so that puts me at 4,350. Notes payable didn't change. Common stock didn't change. Retained earnings. Dividends. service revenue increased by 8,150. So I'm at 102,150. And then interest expense. Salary expense started at 37,000 and then I added 5,500, so I'm at 42,500. 2,500. 7,500. 85. And depreciation 7,500. Okay. So now I have my adjusted trial balance. My income statement, I'm going to start from the bottom and work my way up. So my income statement starts at revenue and then goes to expenses, and I'm going to run out of time here, so I'll just tell you how to do it. So this, from service revenue down is your income statement. Once you get your net income, then you're going to have to do your next one, which is your retained earnings number. It doesn't give that one here. But then for your balance sheet, you're just going to copy over all of your assets and all of your liabilities. And you're going to have to change your retained earnings number by starting with the 26,000, adding your net income, and subtracting your dividends. That will give you your new retained earnings number. Okay? So hopefully this helped you.